All eyes on Greece right now, likely to be a disaster. But speaking about disaster in our country, floods Kunonganan families, underwater, and now it will affect Thailand's largest export to the world, which is rice, is set to cut its estimate for output to the main harvest by 2.4% after floods damaged farmland, a state agency said. Production from the nation's main crop, which accounts for about 70% of total output, may reach 24.5 million metric tons from an earlier estimate of 24.5 million metric tons from an earlier estimate of 25.1 million tons. Apishat Jungsakun, Secretary General of the Office of Agricultural Economics, said in a phone interview today. As many as 166 people have been killed in the past 2 months as flood waters spread across 57 of Thailand's 77 provinces, according to the government. Heavy rain has damaged an estimated 700,000 tons of unmilled rice, Apishat said. About 5.2 million rai of rice land has been unaided, the Farm Ministry said in its website. Thailand's main crop is planted in May and harvested in October. About 4.55 million tons of unmilled rice will be harvested during August and September from 8.8 million rai of rice land, according to estimates submitted to the cabinet today by Thailand's Commerce Ministry.
The cabinet yesterday approved a budget of about 7.2 billion baht to compensate farmers affected either by the now defunct income guarantee scheme or by the floods. The government's assistance measures has been divided into two parts. First, farmers whose plantations were damaged by flooding will be compensated at 2,222 baht per rai, as well as 10 kilograms of rice seed per rai for up to 10 rai. Second, compensation will go to farmers under the income guarantee scheme under former Prime Minister Apisit Wechashiwa's policy, whose production was harvested earlier than its mature period. They will receive compensation of 1,437 baht per ton of paddy rice. Moreover, farmers under this project cannot participate in the new government's rice pledging scheme, which will be implemented on October the 7th. Agriculture Minister Thira Wongsamut said the Bank for Agriculture and Agricultural Cooperatives will be responsible on paying the compensation. The government will allocate a budget to subsidize the bank later. Meanwhile, the Jakarta Post yesterday reported that Indonesian State Logistics Agency, Bulog, wanted Thailand to fulfill its commitment to sell rice to Indonesia under existing contracts, despite Thai claims that they stipulate prices is too low. Under the contract, Thailand must ship 300,000 tons of rice to Indonesia this year. Bulog chief Sutardo Amimoso said Indonesia had not received a response to 2 letters sent to Thailand's Commerce Ministry early this month. Thailand's the world's largest rice exporter previously canceled plans to sell rice to Indonesia, citing low prices, Thai Commerce Minister Kittirat Ranong said. Indonesia, the third largest rice consumer in the world, signed a contract in August to import 300,000 tons of rice from Thailand to rebuild its stockpiles and curb domestic price hikes. Sutardo said that Bulog and Indonesia's Trade Ministry, Foreign Ministry and Embassy in Bangkok were attempting to persuade the Thai government not to cancel its contract. The suspension of Thai rice imports, however, has not affected current supplies in Indonesia, as the imports would have been used to increase stockpiles next year. As of this month, 200,000 of the planned 500,000 tons of rice imports have arrived from Vietnam. Indonesia previously planned to import a total of 800,000 tons of rice this year, including 500,000 from Vietnam and 300,000 from Thailand, to maintain a 1.5 million ton stock for market operations to stabilize prices. Separately, Coordinating Economic Minister Hatta Rajasa said the Indonesian government was committed to increasing its minimum rice stockpiles to 2 million tons by 2012 or 2013.
The cabinet is considering new incentives to counter criticism that its first home policy will benefit only well-to-do people. But it remains to be seen whether the new incentives will be enough to erase the impression that tax benefits under this policy mostly benefit the rich. The cabinet yesterday made a change to the first home scheme it had approved earlier. Under the new rule, first-time home buyers could directly use the incentives to offset annual tax payment, which is expected to benefit taxpayers more than the previous rule. Earlier, the cabinet had approved a finance ministry proposal to offer 10% tax rebates to first-time buyers for houses costing no more than 5 million baht. The government came under criticism for helping the rich who could afford houses priced up to that amount. The Democrats also accused the government of trying to benefit SC Asset, the property firm controlled by Shinawatra family. Deputy Finance Minister Bunsong Teriyapirom said a news conference would be held today to explain the new way of calculating the tax rebate. The previous package allowed first-time home buyers to get tax refunds up to 10% of the price of the property. Under the previous rule, tax incentives up to 10% of a home's price would be calculated as individual expense over 5 years before computing the tax payment.
We're starting off this break with the Thai stocks as the Stock Exchange of Thailand ended its dramatic three-day tumble with a gain of 4.71% yesterday on hopes that the Eurozone nations are planning to step to rescue the debt-ridden nations. However, stock analysts expect more foreign sell-off after the technical rebound on uncertainty over any measure being capable of permanently ending the Eurozone debt woes. Asian markets rebounded on bargain buying yesterday after recent heavy selling, but investors remained cautious after mixed reports. Thai shares recouped some losses. The SET index gained 42.56 points to 946.62 at close. A research note from Financia Syra Securities warned of a risk of further selling off in Thailand, Indonesia, and Philippines. Last year, their average return was 25%, and so far this year, they have outperformed the other Asian markets. In the year-to-date, as of Monday, the Thai market had lost 12.5%, Indonesia 10.5%, and Philippines 11.4%. The note said that in Thailand, foreign shareholdings worth 61 billion baht had been sold from August to September 26. Foreign investors had also unloaded bonds, which had helped to weaken the baht to an 8-month low. SET Chairman Sompon Kiatpaiboon gave an assurance yesterday that there was no political attempt to halt the market plunge when trading halted briefly on Monday. After Monday's 9.42% plunge in the Thai shares, the Federation of Capital Markets Organizations proposed that the government set up a market support fund to buy stocks with good fundamentals. Prime Minister Yingluck Shinawatra said yesterday that the government was now in a wait-and-see mode. Overseas factors remained under close attention. European leaders this week will ratify an overhaul of the Euro Rescue Fund, pledging success in the struggle to restore balanced budgets. While German Chancellor Angela Merkel promised her country's help for Greece, United States President Barack Obama said European leaders had acted too slowly. U.S. Treasury Secretary Timothy Geithner said Europe had not very much time to act. In another development, Spain's finance minister dismissed the talk of Eurozone leaders boosting their European Emergency Finance Fund to as much as 2 trillion euros.